and gentlemen. Well, that stopped everyone. My name is Adam Baker and I'd like to welcome you all to the Caneland Investor Tour. I see a lot of familiar faces here today, but also it's great to see a lot of new investors who have joined the Sentinel family recently. Today's all about Caneland. We've got a great speaker lineup to talk us through some of the asset and the region itself. And we're going to start with a man who knows a thing or two about the region, and that's the Mayor, Mr. Greg Williamson. All right. So I'm a bit technically challenged.
Thanks, Adam. Good afternoon, ladies and gentlemen. Thank you for being in Mackay. It's great to see so many people back together again. Looking forward to a tremendous 2032. Whenever we come together as a group, it's always important to recognise the fact that this wonderful place that we call home, and you're about to invest in, or have invested in, has seen a human occupation dating back about 2,500 generations, and in our valley, that's the Yuwi people. So whenever we're together, as a community, we pay our respects to the traditional custodians and honour their elders past, present and those emerging. So welcome to Mackay. If you've not been here before, it's tremendous to have you in our city. If you have been here before and you're coming back to invest or thinking about investing, it's equally tremendous to have you back here and thinking about investing in town. Our settled community is only 160 odd years old. In fact, October last year was the anniversary of the first white settlement in the Pioneer River, 1862. And it grew rapidly. It was essentially going to become a cattle town. It didn't last too long. But it really did capture the imagination of the early investors and the early pioneers. There was a chief collector of customs for the Queensland colonial government, William Thornton was his name, who paid a visit to Mackay just 12 months after the first settlement happened. And his report is an absolute gem to read. He found 12 unlicensed houses, which were resorted to by ruffians of the most desolate character, intent on spending their entire earnings on brutal debauchery. John Glanville knows where they all are, so. Wasn't long after that the Queensland colonial government decided that they needed to get investment happening in regional Queensland. And so they decided to offer very cheap land, very, very reasonable repayment rates, providing you either grew coffee or sugar. And in our region, sugar was selected. So sugar was starting to be grown in this region by 1866. So just 4 years after establishment. 10 years after that, there were 16 sugar mills in this district. And Mackay Sugar's first annual report says they produced 7,250 tonnes of sugar and 100,000 gallons of rum. So they got their priorities right in those early days. And I've got to say that the Mackay Regional Council is the only council in Australia that owns and operates a rum distillery. So we have monthly taste tests for council? No, we don't. But it's down in Serena, and it produces Serena Sugar Shed rum. It's only a small production run every month, sells out within a week, and it's far better than Bundaberg rum. So if you want to taste some of the district in a rum or a rum liqueur, Serena Sugar Shed rum before you go home. Sugar remains, ladies and gentlemen, as one of the staple of our resources, not our resources, of our annual GDP. And sugar at the moment, the sugar price at $675 a tonne, we haven't seen for a very long time. And that's actually delivering us an industry that's worth around about $650 million to this region, from Mackay and Serena. And that's about 1,345 regional cane farming families. That's $650 million is actually invested locally. And whenever the cane farmers have a good year, you can tell. I mean, they buy their new boats and they do up their beach houses and they buy another car for the family. It's an absolutely outstanding result for this region because we produce a third of Australian sugar. And it's all exported from the Mackay harbour. And the smart people in the sugar industry, there's a lot of smart young growers now, they are locking in prices about an average of $550 a tonne for the next 3 years. And so anything, I can tell you, anything with a 4 in front of it, in terms of sugar price, everybody's doing really well. So the future, in terms of just sugar alone, looks exceptionally bright for our region. Of course, our region is underpinned now by the resources sector. In 1972, the Utah Development Company came to the region and opened up Peak Downs mine, and now, of course, there's 26 mines out there. We produce mainly metallurgical coal in this region. Now, the great problem we have is getting through to the people who sip their lattes in Sydney and Melbourne thinking that coal is a dirty word. And anything with coal needs to be expunged from the Australian vernacular. Metallurgical coal is what you make steel from. 83, almost 84% of all of our exports from Hay Point and Dalrymple Bay, and 9% of the world's seaborne coal leaves our ports on an annualised basis. 83, almost 84% of it is metallurgical coal. And so in my lifetime, your grandkids' lifetime, that's not going to go away because no one has made green coal yet that's energy efficient or cheap enough to actually guarantee a future. Sure, we know there's a sunset clause on steaming coal, the coal that you actually make electricity from. And we're doing a lot of things in that space too. Just over the hills to the west of us, there's huge investment by Swedish companies and a couple of other European companies in wind farms and solar energy. So we believe that there is a sunset clause on steaming coal, stuff you make electricity from. We don't see that as part of our future, but we certainly see met coal as part of our future. And in the last few years, a new met coal mine, millions and hundreds of millions of dollars worth of investment at Byron proves the fact that the state government sees that as well. It underpins about 60% of our regional economy in jobs, in wages, and in local buy. $17 billion in this region alone, is what underpins us. And we don't see that going away anytime soon. And then, of course, we've got beef cattle. It was originally going to be a beef cattle community, but beef cattle is still quite large in this area. It's about a $400 million industry. We produce out of our region, the Mackay, Isaacswood, Sunday region, about 50,000 tonnes of beef per year. And as I said, that's a it's about $174 million in terms of direct revenue income. But the support, the trickle-down effect of the support of all of the region is massive. So there's some really good underpinning industry sectors in our region that points to really fantastic growth, in my view. And when you look at, if we come back to the resources sector, when you look at the prices that are now being seen for met coal on the world market, the spot price for met coal on the world market at the moment is around about $400 a tonne. In case anybody checks, I better just make sure I've got that right. $430 a metric tonne. That's US dollars. 430 at the height of our last boom. At the height of the last boom, when it started the downturn, 2013, 2014, met coal was $305 US a tonne. And so right now, although nobody's talking about it, we don't say the boom word anymore. But there's a serious amount of money being made in terms of the coal production in this region in metallurgical coal. So we are higher than our last boom period. We have new mines being opened up. Regardless of what you might hear, the state government are seriously behind the resources sector, because you might also know that they jacked up the royalties that are coming out of the sector quite significantly. And whether you agree with that or not, it's a process of redistributing some of that wealth that's being utilised at the moment. That's what the government is saying. Maybe it's a little too high, and I think they'll work that out. Our challenge as a region is to make sure some of that money, and it could be as high as $9 billion extra into the government coffers this year, simply because of the royalties and simply because they're making so much money in terms of the world spot price. Our challenge is to get it back here. Our challenge is to make sure that another $100 million footbridge isn't built in Brisbane. Sorry for the Brisbaneites. So we have some serious infrastructure issues in this region that certainly the government are making all the right sort of noises now about, yep, we need to spend more money here. So from a council's perspective, ladies and gentlemen, we adopted our corporate plan, our 5-year corporate plan in February last year. And our aim, unashamedly, is to make this region, the Mackay region, the 125,000 people who live here, want to live in the region, the best region in Australia for livability and livelihood. Livability, of course, is why you select this region to raise your family. And as I said, we are a very young region. 38 years of age is the median in terms of the last census. Almost marginally nil since the 2016 census. So this is a young community. The median age of 38 means the bulk of the people in this community are at the peak of their earning capacity, family raising capacity, and actually, if they put their roots down in Mackay, we need a reason to make them stay here. And that's why we're focusing on livability. Livelihoods, I mean, that's what people come here to do in terms of a job, and that's what investors come here to do in terms of creating a return on investment for a number of reasons. Because it's a great place to live, because it's a young median age, because there is an absolute desire from the council on down in this community to make us one of the best regions in Australia, bar none. Our housing market reflects some of that, unfortunately, at the moment. You can't buy a house in Mackay. Well, you can, but they're snapped up very, very fast. The rental vacancy rate is about 1%. So the rental vacancy rates are very, very low. The rental rates are now at the same as they were at the peak of the last boom, about $440 for a normal rent for a detached house. Goes up to $550 for a slightly bigger house in a inner city suburb. We can't put houses up fast enough in this region. Council has approved about 4,000. There's 4,000 lots available in Mackay at the moment. But of course, one of the real issues that we have is that because of the supply chain, because of the demand on workers, because nobody can get enough tradespeople, and we're not Robinson Crusoe here, it's across Australia, it's across regional Australia. Banks, of course, won't lend if there's not a fixed price contract. Builders won't build on any contracts that's fixed price because their rates have increased in terms of the cost of building goes up on a month-by-month basis. So it's a really difficult situation we're in at the moment. But there's opportunity in all of that. As I said, Council has about 4,000 blocks of land ready to go at the moment. Our growth pattern has returned, and as soon as we get into the point where we have some stability in the supply chain market, when there's some stability in the pricing, I think we're going to see housing domestic housing growth take off. They're telling us probably by the middle of next year. We've got another couple of rate rises to go through in terms of the RBA. But all of the economists that we talk to say by the middle of next year that will flatten out and even start coming down. And so once we see inflation stop and a slight decrease in the RBA bank rates, then we believe it'll take off. And that's probably 12 months away for us. So ladies and gentlemen, this is a great area of Australia to invest in. We as a council have firm belief that this region has, in terms of the short view, and as elected members unfortunately we do take short views, but in terms of the short view, next 4 to 5 years, we can see a good growth pattern. Our challenge is, of course, to make sure that we've got the wherewithal to meet that growth pattern. That includes people, that includes a supply chain that is unbroken and able to be costed, but that includes investment. So I'd welcome you to this region. I welcome you to invest in this region. And if we can do anything from a council's perspective, if I can do anything from a personal perspective to encourage that or answer some questions, be only too pleased to do so. Thank you for being here. Have a great tour if you're doing some rest of the touring around. And if you want to see all those places, John Glanville will be able to tell you where all those places are in the region. It's a great region to be in. Thanks for being here.
Sorry, Greg, just one. A while ago, Greg, sorry to probe it, you mentioned, we were having a discussion about, there's a German company that bought the sugar mills and some of the things that they have planned, and I think for people coming here to understand some of the diversity in
so some of the broader investment that's already happened. Mackay Sugar, as I said, we produce a third of Australia's sugar in this region, a very, very profitable third of Australia's sugar. And it's going to be around $550 a tonne for the next 3 or 4 years. So it's a huge investment. Nordzucker, which is a family-owned sugar company in Europe, German-based, they produce mainly beet. No, not mainly beet. In Europe, they do beet. They bought into the controlling interest of Mackay Sugar a couple of years ago in their first foray into sugar produced from sugar cane. Now, we've got some old mills here, but Nordzucker's investment was a great stake in the ground for the industry. They're here for the long term. They're a family-run company, 300 million euros backing them in Europe, no debt, except for Mackay Sugar now, but their future is now going to be based here in Australia, and they've got their eyes firmly set, not just on sugarcane production, but on what sugar can do in the future. And for us, we've had some tremendous discussions over the last 12 months. First of all with CSIRO's private enterprise company, and predominantly they're leading it now, but sugar as a feedstock for the bio industry, for the biofutures. Now, I'll sound like I know what I'm talking about here, but really, sugar has a carbon content which can be utilised, the molecules of that can be utilised to produce a number of food products in the biosphere. Milk, for instance. Think about that. Now, my first question was, well, what's it taste like? No, it's milk. So if you put milk under the microscope and you get all the molecules of milk, and then you get the brewed product out of using sugar as a feedstock for the brewery that actually produces milk, it's the same. It is exactly the same. So they're saying they can produce double the world's milk supply without producing another cow, without introducing another cow into the world. And so when we get towards 2050, when we can't feed the growing population of the world, and that's what the scientists are telling us right now, we need protein. We need milk, and if this comes about, CSIRO's private enterprise company is saying it will be bigger than coal in Queensland. And the other product, and we're competing against the United States in this, is to use sugar as a byproduct, as sugar as a feedstock for the production of egg white. Now, egg white is the most in-demand protein in the world. Unfortunately, sucrose, which is the corn syrup, fructose, which is the corn syrup breakdown, has a larger carbon content than sucrose that comes out of sugar. So it's easier to produce the egg white in the United States at the moment, but they're running a plant for that. So that's the future. We already grow a third of Australia's sugar. We have 200,000 hectares of good quality agricultural land in our valley alone. Only 100,000 is devoted to the growing of sugarcane at the moment. So our potential to expand the industry is enormous. And of course in Europe, Nordzucker, the owners of Mackay Sugar now, are heavily invested in the biosphere and the biofutures income. So we're very excited to be playing in that field, and I think in the next couple of years you'll hear a lot more about what we can do to use sugar as a feedstock for the biofutures industry, and Nordzucker will be leading the way. Nordzucker is Mackay Sugar. Did I answer that one?
Thanks, Greg.
Are there any other questions that I can help with right now? Thanks very much, ladies and gentlemen.
Truly amazing. That man should be on radio. Okay, our next speaker is Julie Cornwell from the Dynamic Centre Management Team, who's going to talk a little bit about what's happening at the moment and some future plans.
Good afternoon. That's a tough act to follow, so I'm going to be very brief. Thank you very much for having me this afternoon. My name is Julie and I'm the Business Development Manager at Caneland Central. So what my role is to get that marvellous mixture of both those wonderful nationals but also those amazing local operators. There was going to be some pictures behind me that would actually show our local operators. Oh, here we go. Thank you. No? No. He definitely is a local operator. But when you actually tour the centre this afternoon, you'll have a look and see what we're actually bringing to Caneland and how we're getting that marvellous mix. We have these wonderful local businesses who deserve to be into a centre like Caneland. They come into our centre and give them us basically their whole. They rely on us to help build their business, and their business is our business. So over the last 7 years, it was my goal to bring in the best of Mackay. You will see both services, food and fashion. LAFOs, I think you'll have a lovely time this evening. LAFOs come to us after actually having a very, very small business. Thank you. This one there?
Yep.
Thank you. LAFO's come to us regarding her after having a very small business. He's a marvellous operator, perhaps not in the location for him though. An opportunity come up to Caneland. After 2 years of incubation on a casual lease, he is now a permanent tenant who's taken 2 residencies and is, in all honesty, one of the most popular cafes in Mackay. You can see a picture here of our lovely Heath Patton. Heath Patton actually started with 1 chair. He now actually has 8. And has started his own fashion line, all on the back of the fact that Caneland believed in him. We also actually assist our local community with media, with advertising, with small casual leasing in our malls, and also, and activations throughout the centre. I think we've done marvellously in the last 7 years that I've been there at Caneland, but I know with Sentinel at the helm and with the vision that they actually have for Caneland that we'll be able to go further in the future. But I would really love for you to enjoy your tour this afternoon and our local businesses, and please grab me at any time. I'll be happy to answer any questions. But thank you very much for your time today. I know that I'm hoping that you enjoy everything you see today. Thank you.
Last but not least, our trusted advisor on everything property, Mr. Tim Kent.
Good afternoon. Thanks for joining us today. Now, I'll just give you a quick rundown of, there's a bit of reading there, but look, a quick rundown of the asset and the projects that we're working on since we settled in December. So just some key reminders, I suppose, of what we've done. We settled the asset in December for $280 million with a yield of around 7.7%, and that purchase price represented more than 50% value, more than 50% below the estimated replacement cost of the asset. Anchored by Woolworths, Coles, Target, Big W and Myer, with 202 stores in total. It underwent a total refurbishment by Lend-Lease for $230 million in 2011. The moving annual turnover for the centre just cracked 400 million, so 406 million in December, representing growth of 22% since 2017. It dominates the market and attracts around 5.8 million people per annum. Again, that's improved greatly in the last period. We've got over 130 unique shops found nowhere else in the trade area, and we've been focusing on and focused through due diligence on opportunities to add value on the asset. So we're looking at solar installation, possible mixed-use development, including residential, reconfiguration of internal areas, focusing on Target and Myer at the right time. We also, when we purchased it, there's a DA, or development approval, for 5,500 square metres, so I'm looking one way, 5,500 square metres, which again provides opportunities. At this stage we're looking at residential there. In terms of the focus and the business plan, get leasing done, maintain the focus there, improve the weighted average lease expiry profile of the centre. We've got work to do as part of the Woolworths lease, the new Woolworths lease. We've got the rooftop solar, which we mentioned before, and then the installation of a travelator, which we're well into, as well as the strategic development opportunities for the centre. That's just a snapshot of improvement of the moving annual turnover for the centre. So from a year ago, or December 21, that was $380 million, and it is up to 406 reported in December this year, or last year. And that just shows the improvement there of all our majors being Target, Big W, Myer, Coles and Woolworths. Myer at 14% has been a big improver. Again, in terms of our foot traffic, that's up to 5.8 million per annum, up from 5.5 a year ago. Just a quick update on leasing. We've got, for our vacancies currently, we've got 8 of those spaces in negotiation by our leasing team. Of our current holdovers, we've got 14 of 19 in active negotiation, 19 stores. For the expiry profiles of the financial year 23, we've got 17 of the 19 stores under negotiation, and then we've started reaching out to various tenants with expiry profile for financial year 24. There's some of the tenants that we've reached out to. They're the people that we'd like to see in the centre. Tenants such as Harris Scarf, Rebel and TK Maxx, for instance. Mackay, who we have in Casuarina in Darwin, who traded very well from that opening. Mimco, Country Road and Sportscraft, amongst others. One of the projects that we're starting work on and focusing on is around the Coles precinct. We'd like to have a bit more of a fresh food precinct in that area. In that regard, the leasing team has reached out to 4 butchers, 1 Asian grocer, 2 fruit and veg retailers, and we're also in preliminary discussions with another anchor tenant for that area, which would be an exciting opportunity. The main focus that we have at the moment for a strategic or reconfiguration is a Target tenancy. So that tenant at the moment is paying $126 per metre gross. The outgoings to the centre are going to be budgeted around $285 per metre. Now that's okay insofar as we purchase it on a passing yield of 7.7, but we know that with the reconfiguration that we can improve on that. So that's the current configuration that we're commencing discussions on with some tenants, being like Rebel, TK Maxx and Harris Scarf. We're looking at opening this area up here, which we'll show you when you get to the centre, but providing an open area there and a frontage for those 3 tenants, and we think we can get rents there.
Could you ask people, Target don't know this yet, so it's best if people don't tell them.
Yes, this is highly confidential, and that would be great.
Have the media left the room?
Well, Target has a lease, and there's always an option that we can maintain them as a tenant as well. So, at the end of the day, that's an opportunity. But rent-wise, you know, we believe we can add about 1.2 million to the net income of the asset, which, if successful, there adds you know, capital value up to $20 million. The solar plant has been what we've been working on aggressively all during due diligence, and we just finalised the design. Sorry, when I say we, Gem Energy, who's the installer, has finalised the design. The initial design, which you'd see in your IMs, had solar all over the Big W roof. That wasn't possible from a structural engineering perspective. However, with the design we'll have the same output, which we budgeted for. We're looking to start work end of March, finalise work end of November. And the benefit of, I gather from a solar installation, you get the benefits of the solar as you install panel by panel. So once you start the installation in March, we'll start to get the benefits flowing through the net income. So the savings there, we're still budgeting around 1.4 million per annum. Again, on that basis, and this was confirmed by value on the way in, we'll add value to around $20 million to the asset. In terms of the asset, further opportunity, we're just investigating what we can do on Big W and whether that's feasible, whether it adds any further value to get more solar and at what cost on that roof. Another opportunity is residential development. That's a forecast, if you like, of what a development might look like on that site. That's a 6-level development with 12 units per floor. So Warren has commenced a new business in modular construction, which is focusing heavily in Northern Australia, and that's why opportunities like this are possible that we can focus on and possibly present. Initially we were looking at opportunities on the roof top of the car park. That's still a possibility, we're still looking at that, but there are more engineering issues with that compared to using the site here with car parking at ground level. When we purchased the asset, Woolworths signed a new lease. Part of that works is to do a new direct-to-boot development there at the front there. That's underway at the moment. Well, we hadn't started construction, but we're just finalising all the planning that goes with that. That's on target to be finished around October, and that's in line with what the expectations are and requirements for Woolworths. Then finally, one of the parts of the feedback we got from tenants as we purchased the asset was we needed to improve convenience. So one of the things the asset lacked is a travelator. Now when you walk around, well, when you walk around enough, you'll notice there's a lot of prams, a lot of trolleys that need to get around. At the moment, they've only had the opportunity to go up from an escalator here and a lift and a lift. Now we're going to keep the escalator and the 2 lifts, but we'll put a travelator coming up and exiting outside of JB Hi-Fi. And again, that will just improve the convenience for, particularly I think Coles will be a beneficiary of that. They'll be able to do their shop, pop up to the stores upstairs, grab what they want to do without having to drop off the gear and go back to the car. So at the moment, with the budget we put away $1 million for that up front. That budget is holding. We had a few other options to look at. That is the most cost effective and provides the right result for the centre. So that's what we're focusing on now. And again, we're looking to have that in by Christmas. Thank you. Oh, sorry, any questions?
Yes.
Yep. What I missed?
Probably a lot.
Probably.
When the DFO was done, and it was, I think, the largest north of Noosa or something, sorry,
Yep.
the solar facility.
Yep.
This one is substantially bigger, so I would, it's going to be one of the largest in Queensland, isn't it?
Yes, so that one we did at DFO was 1.25 gigawatts. This is 3.4 gigawatts.
Kilowatts or? It's got KW up there.
Well, it's 3,000 megawatts. Yeah, sorry, I'm missing that. Anyway, I'll just say it's there, 3,400 kilowatts or 1,250 for DFO kilowatts. But yes, it's a big one here. So 3 times what we did at DFO. And that was done by, so we tendered out the solar, but again, Gem Energy is someone who we knew, we trusted, they'd done DFO for us. So that's who we're running with for this project.
Tim, can you just refresh our memory on the finance for this that's going to be affected by interest rate rises, or has been a little bit?
Yeah, so basically we're keeping an eye on that as we need to. So CBA is our lender. So we finalised that in December. I think our first roll was at a base rate of 3.19. So basically we've got a margin of 1.9 odd %, which is made up of a line fee and a utility fee. Basically looking through the current numbers and factoring what we think, what the RBA's quoting and so forth, depending on how you want to look at it, I think we can deal with higher interest rates up to that sort of 4.1, 4.25 for a period on the basis that it looks like if they're going to get that high, then they're going to come back. So it depends on how you look at it. But at the moment, the contingency that we set on the way in feels like it's enough to continue on and maintain the distributions as we've forecast. Any other questions? No? Thank you.
So good afternoon, everyone. As we come to an end of the function, I'd just like to quickly take the opportunity to thank you all on behalf of Warren and the Sentinel team for joining us here today for the Caneland Investor Tour. So whether you're new to Sentinel or have been investing with us for quite a number of years, we appreciate your support and we value the importance of building strong relationships with you, our investors. So testament to the Caneland acquisition, we remain focused on identifying investment opportunities that align with our core values and investment philosophy, conducting extensive due diligence and analysis to identify opportunities which deliver strong returns and long-term value for our investors. Finally, to our speakers, Adam Baker, Mayor Greg Williamson, Julie Cornwell and Tim Kent. Thank you very much for your contribution. We've had the chance to hear from our leadership team and industry experts, gaining valuable insights into the trends and opportunities that are shaping the local economy. We are confident that as an asset, Caneland is well positioned to take advantage of these opportunities. And speaking on behalf of Sentinel team, we are proud to be a continued part of the growth of Mackay. So the next stage of the day will encompass the centre tour of Caneland. We ask that you please meet us at Target by 4 p.m. This is accessible mainly via the Woolworths entry via Mangrove Road. So if you haven't yet already checked in and you need to do so, this might be a good time to check in. Otherwise, thank you very much again, and please don't hesitate to stick around and ask any more questions to the team. Thank you very much.